I'm Lisa Doyle with J. Rockley for Realtors, and today I've got a special guest to help answer some of the questions that we've been getting asked probably on a daily basis since the beginning of the year. You know, this is of course January 15th. And so Beth Attebery, I've asked her to join us today because Beth is a CPA, and I think tax laws right now are probably most consumers and most people, most clients of ours. One of their largest questions is, how did the tax laws change? You know, especially a few that have to do with real estate sales. And so tell us, Beth, your company's name.
Sure. So my company is Henry C. Levy and Company, and we're a full-service CPA firm in the Rockridge district of Oakland.
Okay. And you specialize in the real estate arena as far as taxes?
We do.
Estate planning, things like, okay, good.
Yes.
So, of course, one of the biggest questions that we've had in the last couple of weeks has been the Debt Relief Act. So tell us a little bit about the part that's been extended and what's going on with the rest of what we're waiting for.
Definitely a hot topic right now.
Yes, exactly.
So it was initially set to expire at the end of last year, at the end of 2012.
Right.
And basically what the Relief Act was, debt in feds and in the state of California is usually taxable. So if you've been relieved of debt, like in a short sale or a foreclosure, then typically that would be taxable. And so this law came out saying that that would not be taxable on your principal residence, and the act, like I said, was set to expire at the end of last year.
Right.
It has been extended another year.
Right.
So we're safe through the end of 2013.
Right.
Once we're in 2014, we don't know yet what will happen then, but we do have one more year. And last year, the state of California conformed, and they also said that that would not be taxable.
Right.
They have not made a decision yet for the current year, so there's still a bill in legislation that's being considered. So to be determined on that one.
Yeah, we should know soon, right? Is that what we're being told?
I hope so.
Okay, yeah. So for anyone thinking about doing a short sale, you know, of course, what that means is that you're relieved of that tax, of the burden of the forgiveness, which could be very extensive.
Could be substantial.
But you know what most people don't realize? That once the Debt Relief Act goes away, that if you're foreclosed on, that's considered debt forgiveness, and you could be taxed on that as well. Is that
exactly?
And most people don't realize that.
Right. That's what the law says.
Right.
Is after as it is now, after 2013, if you're foreclosed and your debt is forgiven, the amount of that debt will be taxable to you in the year that it's forgiven.
See, most people only think it's short sale that does that. So I wanted to make sure everyone understands that it's a foreclosure as well. So now tell us about, I know that there's a few key taxes that have changed.
Yes.
Explain, if you could, what that means to the average consumer.
Sure.
Thank you.
So there's 2 federal tax increases and 1 state tax increase.
Okay.
I'll start with the state increase. So that was Proposition 30, and that's actually a retroactive increase back to January 1st of 2012. So that will impact taxpayers. I'm going to simplify here. If your income is in the $400,000 to $450,000 range, then this will be applicable to you. The rate is 1 to 3% increase depending on your income level and your filing status.
Okay.
So retroactive back to the beginning of last year. So hopefully your financial planners and CPAs, you know, made you aware of that change. Otherwise, you may be in for a surprise in April.
Yeah.
The other 2 changes, the federal changes, are for 2013, so effective January 1 of the current year. And one is what is being referred to as a Medicare tax increase. So this is going to impact taxpayers whose income levels are starting at $125,000 for married filing single, up to $250,000. Again, it's going to depend on your filing status. So I'll just giving you the range, and that's going to be a 0.9% tax increase that would be run through payroll if you're in that range. Same income range for what's called a net investment income tax. So if you're in that income range and you also have earned income and investment income, you may be subject to this new 3.8% tax increase on your investment income.
3.8% is a lot.
Right, and if you combine all of those between federal increases and state increases, it could be like I said, an unwelcome surprise come tax time.
Well, now is a good time for anyone who's in those categories to make sure you get some advice on how to plan from here forward.
Yes.
You know, make sure that you're doing what you need to do to plan. Now, I know that we talked, you and I briefly were talking about some estate tax changes. Explain a little bit about that if you could.
Sure. So that was another hot topic at the end of last year. So the gift tax has been increased for 2013. Last year, the maximum amount that you could gift without having a reporting requirement was $13,000.
Right.
For the current year, that's gone up to $14,000, and the exclusion went from $1 million to $5.2 million.
Okay.
So, and a lot of taxpayers get confused, I think, with the gift tax rules. They think that if you gift over $14,000, for example, in the current year, that you're going to have to pay tax on anything over that amount. That is actually not true. If you gift more than $14,000, you have triggered a reporting requirement.
Okay.
So you'll have a filing requirement, but it's not necessarily a taxable transaction.
Okay.
You have to gift over your lifetime a specific amount before it becomes taxable to you. So that's something to discuss with your tax planner or CPA.
Yeah, that's interesting. I've had a few people ask that same question. So is there anything that you would advise an investor to do at this point, if they do have multiple holdings in real estate, to alleviate additional tax if they choose to sell properties? Is there anything that they can do at this point to prepare, in your opinion?
So I would say the biggest item to be considered right now is if you are in a situation where you may be foreclosed on, or you may be in a short sale position, that we got that extended through the end of this year, but we don't know beyond this year what will happen. So if you're in that position and it's a foregone conclusion it's going to happen, I would try to push that into the current year if you can.
Right. And plan ahead, because as most of us know, and I don't know if a lot of our clients understand completely, that short sales can take 6, 8, 10 months to be completed. So I've had some clients who last year were very glad that the tax laws got extended, because we weren't able to close quickly enough for them because they planned too late in the year. So make sure that you plan early, because I would suspect that tax probably, or the forgiveness probably won't be extended another year. I would suspect.
Right, the way that the market is going, and you probably know better than I do on that, but I agree. I wouldn't be surprised.
Exactly, good. Well, thank you so much for your help. Is there any other last minute piece of advice you can give anyone who is trying to make sure that they do things properly and prepare and
Sure. I would say just in general, if you are having any what we call major life changes, such as purchasing a home or selling a home, or maybe you're turning your residence into a rental and purchasing another property, any large transactions like that, you should consult with your tax advisor before you go through with the deal. There's not much we can do once all the paperwork is signed and the deal is done, but we can help you if we know in advance. And we also would work directly, with yourself or whoever is involved in the transaction. So
thank you. Yeah, well, would you give your number where they can reach you in case they have, specific tax questions? I know a lot of our clients are considering doing exactly what you said, is renting out a current home, because purchasing right now is pretty favorable as far as interest rates.
Yes.
Our market is beginning to recover at a pretty consistent level. So if you're going to do it, now's a good time while the market is in revving. If you're going to keep your current home as a rental, they might have some questions for you.
Certainly.
Yeah, so would you mind give your name and or your name again and your phone number and where they can reach you? Sure.
So my name is Beth Attebery. Again, the firm name is Henry C. Levy and Company, and our phone number is 510-652-1000, and my extension is 303.
Yeah, thank you so much, Beth. I really appreciate your help, and thank you so much. If you have any questions or anything I can help you with as well, give me a call. My number is 925-890-7443. I look forward to seeing you soon.